Okay, we're about to start our broadcast, our weekly real estate update in a couple of seconds over here. You guys are joining us right now. Thank you. In a few seconds. People are jumping in the call. That's great. If you're joining on the app, please mute yourself. If you're joining on the app, please make sure to mute yourself when I see the speaker. We're going to start in a few seconds over here. We have great guests on today's meeting. Okay, everybody, we're going to start in a couple of seconds over here. Looking forward for today's meeting. We have great guests on our call. Okay, thanks everybody for joining us. I see we have more and more faces in our feed on Facebook as well. So thanks for joining. Friday weekly update. It feels like every day is Tuesday. That's the joke right now. So yeah, it is Friday. So happy Friday, everybody. Super excited to have today the CEO and president of KINECTA Federal Credit Union, Keith Sultemeier. Keith.
Hey, good afternoon.
Good afternoon. Great to have you joining us today. I appreciate it. A little bit about Keith. He's experienced CEO with incredible history as a banker, skilled in portfolio management, financial risk, commercial lending, banking, and of course credit unions. You a pretty impressive, consistent background, Keith. You used to be the CFO of the Federal Credit Union, I think back in Texas for 12 years.
Yep.
And then the past 8 years, the CEO of KINECTA Credit Union here in California.
Yep, right here in Manhattan Beach.
Manhattan Beach, yes. Yeah. Do you want to share just a bit about KINECTA and what you guys are doing? I mean, what I know is that you have massive asset management portfolio, and you have about a 250,000 consumers?
About, a little over 250,000 members, and we do all lines of business, consumer, real estate, and commercial. We've got about $1 billion commercial portfolio, $5 billion in assets overall, and as you mentioned, about $2 billion under management on the wealth management side.
Yeah, that's massive. Congratulations.
Thank you.
Yeah,
we're small by banking standards, pretty large by credit union standards. So
that's exactly what it is. Yeah, it's pretty massive. Yeah, and I've been a client of KINECTA for many years, so I appreciate what you guys are doing and how you run the show.
Thank you very much.
So Keith, as a banker, we know there's a lot of things happening right now, changing day by day. There was the first wave of the CARES Act with the whole, monies that came out, and right now I think they just signed for the second wave.
They did.
Yeah. What can you share from a banker point of view, some kind of insight of what you guys are going through?
Yeah, it's some of it we expected. When things get tough, we usually see quite a few people, a lot of members flee to Quality with their assets, so our deposits went up really quickly, which is fine. We're here to serve. We already had a very strong mortgage portfolio pipeline, and that's continued. So we're still seeing quite a bit of mortgage activity. We've had to deploy our folks out of the office back to home, but we were able to manage that transition pretty quickly. And a lot of refi business still coming in. So far, we've managed to keep our turn times under 40 days, which has been tough, but our biggest issue right now is with appraisals and, surprisingly, notaries. So California doesn't allow digital notarization, so it makes it pretty complex. And a lot of folks don't want to let appraisers in to their homes to do the appraisers. Some are okay. Our regulator, like Meny, has given us some latitude to just do exterior appraisals at this point, and we're taking advantage of that. The notary issue is a little tougher, and we're scrambling a bit to make sure we can find notaries to close transactions. So that's a bit challenging. On the consumer side, auto lending has dropped down to close to nothing.
Wow.
Except for folks that want to refinance. We have lots of members that are looking at their monthly burn rate and saying, you know, if I can, maybe I've been neglecting it, but if I can lower my monthly payments, that's a good way to conserve cash. And so we are helping with that. Rates are low, so we do get quite a few of those requests. Personal lines, we're also seeing some of that unsecured. We made the decision early on that we would not be reducing outstanding credit lines, so credit cards and personal lines, and home equity lines as well. I know there's lots of the bigger institutions that are doing that, but it seemed like exactly the wrong time to cut people off. So while we're monitoring it pretty carefully, we're also making sure that folks have the liquidity they need to get through this. We have seen because California, at least for the last couple of years, has kind of been the disaster of the month club with the fires and what have you. So we had already set up a pretty good suite of emergency products for our members, and we just blew the dust off and put them right back out. So emergency loans for cash, which we do without regard to credit. So if you need cash today, we can get that to you. 0% interest in 12 to 24 months to pay it back, depending on what you want. Loan forbearance we did pretty early on all of our loans, not just the GSE backed mortgage loans. On the CARES Act side, it's a mandatory if a consumer requests it and indicates that they've been impacted by COVID. You're required to give them up to 12 months of forbearance.
Right.
There's no such stipulation for those that aren't GSE backed, and then for any consumer loan. And the regulators and accountants had given some early guidance that said you can only provide forbearance if the loan is current, so 30 days or less past due at the time you grant forbearance. Otherwise, it has to be reported as troubled debt, so a delinquent loan, and not just for regulatory purposes, but also for consumer credit reporting. And we worked with our trade associations to get some clarification on that, and they came back out and released that stipulation. So as long as they were current on or about January 31st, we're able to grant forbearance without impacting their credit. And we've done quite a few of those, probably about 7,000 consumer loans. And if I'm remembering right, about 600 mortgage loans. And of course, we're doing more every day.
In what period of time, by the way?
Since I would say mid February.
Wow, that's massive, yeah.
Yeah, and it's still coming in, and my big fear, even though we've been reaching out to our members pretty frequently to let them know what options they have available, is a lot of times when folks get behind on their obligations, they just go radio silent, and we can't reach them and we can't help them. And if we never get in touch with them, we can't grant the forbearance that we would. So it's, hopefully we can catch them and they'll trust us enough to help them out, and we'll do that. The kind of secondary fear is that once this is over and, we've lost almost 25 million jobs now, how many of those come back, and then how many of these folks are ultimately are going to be able to repay their loans.
Yeah, and like you mentioned, the forbearances, they're more than 6% of the entire U.S. mortgages right now in
Yeah,
forbearance, and
yeah,
that's those are massive numbers. Um,
yeah, yeah, for sure. And for a lot of institutions, that's only the GSE-backed mortgages, which here in California, there's a much higher proportion of non-conforming loans than there are in other states. So is probably going to have a larger impact here than it would elsewhere, and folks not technically qualifying for forbearance and having lenders that aren't willing to grant it. Because as you had mentioned the secondary market earlier before the call, and Fannie and Freddie have both come out and early on and said, "Hey, we're going to reduce the window where we will buy a mortgage loans. Typically, they would buy loans up to 12 months after origination. They changed that to 6 months, and then
mhm.
they have a standing policy that says they won't purchase any loan that's been placed in forbearance." Uh,
Right.
and so again, we got with our legislators and said, "Hey, here's the deal. A lot of these folks that you intend to help are not going to be able to get helped by virtue of this, because if a bank can't sell the loan, it's going to impact their liquidity, which you guys want all the liquidity possible out there today to kind of help people get through this." They did come back and say, "Well, we will purchase a loan that's in forbearance, but we're going to purchase it at a discount, 4 to 5%." Well, there's not that much margin in those deals, and 4 to 5% of the principal is a little bit more than all of it. So for our cases, it's pretty much useless. So we're prepared to take these loans into portfolio if we need to. We do that pretty routinely. We do sell roughly half of our originations through to secondary market. We retain servicing on all of them. But if we need to, we've got balance sheet room. We'll put them on the balance sheet and keep them.
Yeah, and thank you for giving a bit more insight, because this all came about, I think maybe the last couple of days,
Yeah,
about that forbearances and Freddie Manny, the whole secondary market, and it's a bit confusing because on one hand they expect the government to come and help or
right.
extend the help on whatever, and then on the other hand it's like, okay, this is how we're going to help you, but it just doesn't make any sense.
Yeah, and one area that they haven't yet addressed, but which they really need to, because it's going to be a big problem probably within the next 30 to 45 days, is mortgage servicers typically don't have big balance sheets, and for sure don't have lots of cash reserves. These are the ones that take the payments and submit them to Fannie Freddie. A lot of loans get sold into mortgage-backed securities.
Right.
And under the part of that sales agreement is that the servicer has to remit the payment, principal and interest, even if they don't receive it from the borrower. Most of our loans we sell at the cash window, so we only have very few that would fit that category. But if you're a servicer that's basically, your business is just making the 25 basis point servicing fee less, your costs, and you have to submit payments on, even call it 5 to 10% of your portfolio,
Mhm.
that's gonna leave a mark really, really quickly. And some servicers, it's much greater percentage than that. So I would expect there's going to be some real issues around it fairly soon.
Did you already pull the trigger on that, by the way, or it's just talking about it?
No, no, that's done. So that's all part of the agreement. And what they're talking about now is whether or not they're going to allow some manner of relief for these guys. Um, and this is just conjecture on my part, but I assume the holdback is that there's a legal agreement there, and so the government would take some kind of legislation to get inside of that, and then it's going to have ripple effects. So the companies that hold the mortgage-backed securities now aren't going to get paid. They have obligations to pay. So they're trying to figure out, I'm sure, just about how far that goes. But if we have servicers that can't continue to service mortgage loans, um, then all loans may end up in forbearance if they can't receive the payments.
Yeah, and that's every cycle. I mean, you've been around long enough to go through the previous market crash
Yeah,
and previous crises and what have you. And it seems like every crisis has a whole different
yeah,
mechanism.
yeah.
Do you see any of the '08, '09, the last market crisis, somewhat coming back in different version, like what we have with like the short sales and REOs?
Yeah. It's hard to say right now. If the difference between the '08, '09 crisis and this one is it was largely a financial crisis and a real estate crisis. So
Right.
the asset values backed up so much and liquidity dried up so quickly and kind of left, you know, it's kind of the opposite of a short squeeze. Now I got all these people with properties that were counting on being able to get rid of them. They can't get rid of them.
Right.
A lot of them were very highly leveraged, and I don't see that this time. I do think there'll probably be quite a bit of commercial property REO. We're concerned about retail, hospitality, and to some lesser degree office. And so you got to be really careful about your rent rolls and the types of tenants that are in there and which ones are going to be exposed and which aren't. And um, that'll be a problem. But I don't see the magnitude of what we saw in '08, '09 from a real estate perspective.
Yeah.
Now all bets are off if a good chunk of that 25 million jobs that were lost don't come back. Then it could be a little bit more impactful. But for the folks that still have jobs that can still continue to pay their mortgages, I think it'll be fine. Also, I think at least in California, we don't have a surplus of housing here. If anything, there's a huge glut, and it gets a little bigger every year because there's no new inventory or very little new inventory coming online. So, I tend to think that prices will hold up quite a bit better than what they did back then. But again, each time in the cycle is different, and this one is definitely different than anything I've seen.
Yeah, for sure. Yeah. And thank you for sharing that insight from your point of view as once again substantial banker player in the game. I had a few days ago a great conversation in one of our meetings with both president and CEO of the National Association of Realtors,
Hmm.
and Vincent Malta and Bob Goldberg. And they're lobbying hard for the realtors, which also the homeowners by default in the country, doing a great job. Who's lobbying for the bankers out there, and how do you guys
Yeah.
represent?
So the bankers have their trade association, which is very well funded and very active, and credit unions have their own, a lot less well funded, but also very successful. In that, typically, our missions and banks' missions are quite different. We're not-for-profit institutions, so as financial institutions, we need to make a margin to stay safe and sound. So we have to have capital like any financial institution. But maximizing profits is not our mission. Serving members is our mission, and we want to do that safely. But to the extent that we have the capacity, we're going to look for their interests ahead of the profitability of the organization. And at least for this year, I expect that's going to be part of the equation. We're doing all kinds of financial modeling to post base, best, and worst. And in the worst case scenario, we see kind of a break even for the year, so almost kind of a lost year. If the economy starts to open up, I think now the consensus is maybe May 15th. at least in California, and it would be a limiting or escalating, series of reopening. Um, then I think we'll be okay. I think we'll be okay. But you got to get the economy going within the next, call it 30 days or so, or there's going to be some pretty permanent damage that'll take a good, 3 years to get back from.
Yeah, well said. And we know we're following the news, excuse me, on a regular basis right now. Some states, specifically here in California, Governor
Yeah.
Newsom is pushing hard to applying that. We definitely want to go back to open the economy, but at the same time, we have to be cautious from the second waves of the unknown.
Yeah. Now you want to be, I mean, it's a careful balance between public safety and economic survival. And I know, you definitely don't want, the cure to be worse than the disease. So, I'm certainly no expert on it, but at some point, we're going to have to loosen up, keep the kind of restrictions in place on social distancing and masks and maybe even limiting the number of customers that can be in a shop at any one time. But I do think that if we wait too much longer beyond 30 days, that it's going to have some much more severe consequences to it. A lot of the businesses that we work with have been able to hold up, at least for this last 30 days. Although many of them are saying that if it goes on too much longer, they're going to struggle. And we are participating in the payroll protection plan through SBA.
The PPP, yeah.
Yeah, that's been a bit of a nightmare. From SBA is just not set up for this level of activity, and their systems, like many government systems, are pretty antiquated. So while we've been accepting apps and processing as quickly as we can, we're subject to the system crashes.
Sure.
Whatever we've entered, we need to re-enter, and it's frustrating. But I will say that we've redeployed some of our folks out of our branches and out of consumer lending into this area so that we could increase capacity. And they're really fired up. We're getting great stories back from these businesses that we're helping, and we also decided when the program was announced that we wouldn't serve just current members. So we were going to open it up to anyone that's in our communities.
That's a big one.
Yeah, and that we would process and fund the applications and the order received, which seemed the fairest way to do it. And I think now we're over 2,000, and we were able to fund only about 175 in the first round before the funding ran out. Now, fortunately, we kept processing even after that, figuring that they'd probably refund the program, which it looks like they have. And we were actually I was able to get my programmers to automate some of that process. So as soon as the SBA opens the system back up, we're going to slam through as many as we can. And also fortunate with this round of funding. Last round, we were essentially competing with Wells and B of A and some of the others for the money. And as they have huge organizations, they were able to kind of flood the system in fairly short order. This time, Congress has said, hey, we're going to allocate 60 billion out of this roughly 300 for smaller community institutions. So those less than 10 billion in assets have 30 million carved out just for them. Those less than 50 have a total of 60 billion. And then the larger national banks play with the rest. So I think we're going to have a bit more success. One, because we're much more prepared to get these things processed quickly now, and also because some of these funds have been set aside to make sure that they're getting into the hands of the small community businesses.
Yeah, and I think that once again, the last couple of days, it comes from different resources, various news. They said, it was signed, it's going to be sent out, and they give you kind of like, um, optimistic news to, if you already
Right,
did it and didn't get it yet, don't do anything. It's going to come, it's going to, it will get back to you, or the bank is going to get back to you, what have you. So,
right, right. And the SBA did say that they essentially wiped out their queue. So the loans that they had queued up for approvals at the time that they shut the program down, those have all been deleted. So the lenders are going to have to resubmit those. And we know which ones we had submitted, and we're waiting for an approval from SBA on. Some lenders may not. Either way, it's going to be a race at the start. And so far, they haven't given us notification as when they're going to open their systems back up. But our team's kind of waiting with their finger hovering over the button for that notification.
yeah. You guys been working remotely, I assume, since it all started?
Yeah, we've
Besides you, I see in the
no,
office.
I'm coming to the office because nobody else is here, and I can isolate here just as easy as I can anywhere else,
Same
right?
thing. Yeah.
No, we've got about, except for our branches, which all remain open. We've got about 95% of our workforce working remote from home, and we got a little lucky there. I'd like to say we totally planned it out, but truth is we got a little lucky in that we had replaced all of our PCs recently for a Windows 10 upgrade, and we ended up buying PCs that were Wi-Fi enabled.
Okay.
And so we were able to install some software and so that people could actually take their phone calls at their extension from their homes. And that transition took only about 3 days. And, so far it's worked actually really well. And we're limiting the number of staff and members in a branch at any one time. So the staff that aren't working in the branches are on the phones supporting the call center, and we have some supporting the PPP program. So there's plenty of work for everyone to do. It's just we're doing it in a lot different way than we normally would.
Yeah, it's back to your comment earlier about we're gonna go back to business, or it's gonna be the new normal for a lot of people in different ways.
Yeah, yeah.
Interesting.
I fully expect that we will have quite a bit of requests from employees to work from home on a more permanent basis.
Yeah.
And I don't think we'll be the only ones out of that. And I think this is a kind of a litmus test for some employers that are going to say, you know what, we can still be effective with folks remote. Maybe we're going to have, a portion of our workforce working remotely. And then you start to look at it kind of downstream and say, okay, well, what does that do to the office rental environment? What does that do, to those property owners? That remains to be seen. And I think we will have we had a remote worker program in place. I think we'll end up expanding it some. But the other thing that, at least in my experience, now, granted, this was in Texas and the traffic situation was quite a bit different than it is here. But what I'd seen is that virtually everybody in our workforce absolutely loved the idea of working remotely and definitely wanted to do it. And when we set them up, they felt that way for about 90 days.
Yeah.
And after 90 days, they said, I really need to come back to the office. I need the team around. I need a change of scenery. I'm going crazy here. And, so it's hard to say how permanent it is. Now, that was where people had an average commute of about 20 minutes, where they have one of about, 60 to 80. Maybe they can last a little bit longer than 90 days, but we'll see.
Yeah, great insight, by the way, because it's like, once again, the environment of the future. And I'm not sure if you familiar or follow with Gary Keller, the founder of Keller Williams, based in Austin.
Yeah.
Based in Austin, Texas. Yeah. So, for the almost 2.5 years, primarily the last 2 years, been talking, with us, all the branches around, there's like 1,000 offices around the nation
Sure.
about the shift. Now, it didn't have a name or a size or whatever,
Yep.
but for the past 2 years, we are broadcasting live meetings and seminars.
Absolutely.
Some staff works remotely, and and some offices do change size of offices or
Yep.
more open space and everything. So it is going to be interesting back to
Yep.
normal, how it's going to look like.
Or they just have hoteling space where you don't have a permanent seat, but when you need to come into the office, you come in and you take whatever seat is
Lounge.
available. Yeah. And we've actually explored that in our offices as well. And it could be just our folks, but what we found is people want their own space. Even if it's only 5 feet by 5 feet, I want something that's mine. And what they really want is options, right? So they want a concentration space, which isn't open, where they can go concentrate, take a call, whatever. But then they also want some flex space. So they want an area where they can meet in small groups, and they want an area where they can meet privately in small groups. So we're redoing one of our buildings down the street now and putting some of those design elements in it. And we've got some test space there now. We're moving groups in on a 30 to 45 day basis to get their feedback.
Interesting.
And the first 2 weeks they hate that their concentration space, or what they consider their desk, is smaller and a little tighter. So we hear that feedback, but then over time, where they take advantage of, the co-working space, they're kind of saying, yeah, you know what, I think we can deal with this. So, as we roll it out on a larger basis, that may be kind of our new normal. And I know we do this already for, our mortgage loan consultants. They all do hoteling space because like realtors, they spend a good portion of their time out of the office anyways. And so they're essentially home based, but a lot of times they need to come in, they need a place to do a client meeting or a closing. And so they come in, to the office and take one of the hoteling spaces. And then we have meeting rooms for client interviews or closings and that kind of thing. And that's worked out really well for us for about 5 years. But I don't know yet if that's kind of unique to the role that they have, or if that's something that a larger portion of our workforce would want to do. But this is a great time to test all that stuff, all the questions that we wondered about. This is kind of the crucible for that.
That's right.
And
well said. Yeah. Lots to learn from you. I would love to stop by and see that a future space at one point.
Yeah. We actually, I took a little risk and put in kind of in the fintech vibe, we put in an employee cantina with about 10 beer taps and a couple of wine taps, and opened that about 90 days ago, and it's all digital, so it works on your employee badge, and it knows how old you are, and it'll only distribute a certain amount over a 24-hour period. So we kind of are able to keep that under control, and not surprisingly, it has been very well received by staff. So
mostly on Fridays, I bet.
Almost always busy on Fridays. Not as much during the week, but always busy on Fridays.
Well, shout out to KINECTA for what you do for your employees. Keith, while we have you on the call, the next couple of seconds, anything else you want to add? You want to share with whoever is watching?
I hope that we don't lose the entire summer selling season, and that we still get some activity there. Again, I hope that what we're going to see is a lot of pent up demand when folks are able to get out and start looking at homes again and going to open houses and things like that. I know hope isn't necessarily a plan, but I'm not sure how else to plan it at this point.
Right.
But you know what? we're still open. We're still processing loans. We're still getting good turn times, and hopefully the lenders that you guys work with are supporting you. If they're not, hey, where we're at. So we're happy to do it.
Yeah, thank you. And shoot me an email with the information that I can share afterwards with people that, if they
Absolutely.
want to have inquiry or number or whatever. Um,
Absolutely.
Keith Sultemeier, the President and CEO at KINECTA, Federal Credit Union. Brilliant talk. Thank you so much for your time. Stay safe and keep
It's
up
my
the
pleasure.
amazing job.
Yeah.
Yeah.
Thank you very much. Take care.
Thanks, Keith. Thank you so much.
Bye bye.
Bye-bye. Okay, that was Keith Sultemeier, the CEO of KINECTA. Great talk. And now we're going to have our incredible Tina Burke. Tina, let me just unmute you. Are you on the call? Tina Burke?
Yeah, can you hear me okay?
I can hear you great. Tina, how are you doing?
Perfect. I'm doing great. I'm sorry I'm in the car, but I'm here. How are you guys?
It's okay. I put a slide of you, your a gorgeous picture over there smiling with your favorite green shirt. We got you covered.
Oh, lovely.
And
Thank you.
of course. And two things. First of all, Tina is a certified appraiser for over 20 years and a licensed brilliant realtor as well. And Tina, you cannot see it, but there's right now on the slide a shout out for your birthday. So happy birthday, Tina.
Oh, thank you, Meny. Thanks. Yeah, it's another year older.
Another year, yeah. We're getting better and better. So
Yep.
I'm not sure how deep into the conversation or when you jump on the call, but we just had Keith Sultemeier, the CEO of KINECTA, and one thing he mentioned at the very beginning was their challenge with mostly two things. Number one was the notary, or the issue with the digital notary. The second thing was with appraisals. So
Right.
you as a certified appraiser, what can you share with us, your experience, what you've seen out there, home values, access to properties, etc.?
Well, yeah, for me, I've done a handful of the desktop appraisals where you, especially on purchase transactions, where you don't have to go into the property. They're doing a full 1004, which is the form number, but you're not having to. I'm not, as an appraiser, having to go to the property. I can do that from sitting behind my desk. And one of my biggest clients is Quicken Loans, so I'm seeing a lot of that with them. It makes it easy because it keeps me away from a homeowner. It keeps them away from me, so it's the distancing portion of it is handled. And then there's just certain language that goes into an appraisal like that kind of covers everybody from a scope of work. So here's what we've done. Obviously there's not going to be a sketch. There's not going to be any interior photos unless I pull them off of a listing. So the more photos you have for your listing, the better that's going to be for the bank. They're going to have some level of trust, like they used to with a 2055 exterior. In fact, I'm doing more of the 1004 as opposed to the exterior appraisals where I do a drive-by and take front and street. So, I still am going and doing those appraisals because, I have a business still to run and people still need them. It's still an essential part of getting the financing for the loan.
Right. Do you see any kind of change anytime soon, or just to be more specific, I believe that in a couple of days, we had last week, we had Dr. Lawrence Yun, the chief economist for NAR. He
Right.
shared a great insight. And I believe that this coming weekend or maybe by Monday, they're going to release their monthly stats, housing market stats for the month of March,
Right.
which is going to be like a mixed report between, the good March and the other March. So we don't have enough supporting numbers yet but from what you see, What do you think about
Hmm.
price points? Do you think are we gonna already seeing some kind of decrease? Do you think we're gonna see more of that?
I don't think so. Not in what I'm seeing yet, because what we still have to do from an appraisal standpoint, I mean, I can't accurately, sort of account for what we're going through right now. So the only thing I have to use is past sales. Any appraiser who's trying to sort of extract what's happening here from a value perspective is making a huge mistake, because we still have guidelines to follow. We still have to go back and look at comps. So, if somebody is willing to pay for a property, the people that are purchasing properties haven't lost their jobs. They're still working, albeit from home, but they are working. And we're still looking at the data that happened, early March, February, February, January, and before. So we're going back in some cases still 6 months where the market was still had good activity. Now, what you may find is when we get into June and you're taking a look back at, something that's going on in April or May, then we may see some kind of a downturn. But, I think most of it is people jumping the gun on like an oh my God situation. If the problem is that the difficulty is not being able to see the property as readily as you used to be.
Right. Yeah. And
The other thing to
go ahead. Yeah.
remember is, unlike real estate agents and mortgage brokers, the appraisers are not a very well represented group in Washington or anywhere else. They're lone wolves out there, but they have all of the responsibility, and they have a lot of it on their shoulders to make sure. So you're going to see some appraisers be extremely conservative, and that's a mistake on their part also. They still need to use the best comps. They still need to get out there and look at the property, and there's still a market for these things. And if they're being cautious because they're afraid of what's going to happen to the loan next year or in 5 years, which, they do have that liability, then they just need to do enough explaining within, their addendum or wherever they do it to make sure that it makes sense to somebody who may be going into foreclosure. I mean, there's going to be, I think, like the guy who was just on the phone a minute ago, there's going to be a lot of foreclosure, I believe, coming up in the next, because the jobs aren't coming back for the people who do have their mortgages, not the purchase transactions we're seeing now, although that could happen.
Yeah, that's going to be interesting, thing to see. Interesting in the sense of, hopefully it won't go there in the sense of the
No.
impact of the economy, because it's going to be like another wave that, I don't know if you all, want to experience that, and it's going to be a very, very specific, narrow wave. But, like I mentioned, there are over 6% right now, the entire U.S.
Yes.
homes that are on have a mortgage forbearance, so it's going to be challenging.
Right. And if you have if you own your own business like we all do, and even if you're making a little bit of money now, I still think it's not a bad idea to check to see forbearance, just in case, because obviously, we talked about this, that small business loans didn't go to the majority of the people that I know, and they're still waiting, and they may not get. I got my $1,000, but I'm happy for that, obviously. But it's like a lot of people haven't gotten anything, and we still have to. We're working in a market that's not functioning at full capacity. No matter what we do, we're still. We have our hands tied to a greater extent than we ever have, to sell property and show property and get buyers to wrap their head around virtual tours or whatever,
Yeah, exactly. Yes. From a realtor point of view, Tina, do you still see, regular deals going through? When it comes to buyers buying and sellers selling the properties, or it's all gone?
Yeah, no, I still see. I just think there's a lot of people that are like waiting to see, just because it's a good thing to see what happens. Maybe they're going to get a good deal on a property, because I think prior in early, late February, early March, there were multiple offers on properties that it were just like crazy. And then someone, the spigot just got turned off, and, those people that were, not able. So I had 3 escrows closed since this thing happened, and these guys all had jobs, or engineers, or working for companies that still are functioning, and it was just them. What happened was, in one of the cases, is that they were able to get a property they normally would have never been able to get, because there wasn't the amount of crazy activity on it because of COVID.
Right. Huh.
So, yeah, I am seeing some appraisers, though, from an appraisal standpoint. People in the office and have come to me and said, my appraisal came in low. Can you help me out? And the answer is always yes. Always just send me an email and attach the appraisal to it, and I'll always put my eyes on it. I can tell you whether it's, justified or not, but some of these appraisers are just so afraid. And you guys, from the real estate aspect, have to understand what it's like on their end. They are constantly scrutinized, and they are up against a lot of backlash, down the road for the next 5 years once they appraise something. So they may be cautious, but they still have to do a proper job. It's still a market, and they have to analyze the market. If somebody has an offer in on a property and they're afraid to bring the property in at asking price, you still need to question why is that? Why are you having a problem appraising this property? Don't just let it go at all. Don't just accept that. Challenge it always.
Exactly, yeah. And you've been a great, incredible resource in our offices to someone that, understand the aspect of real estate and the side of the appraiser, how they function, because that's what we do as well. And you actually saved many, many deals.
I try.
Yeah.
I mean, it's like one of those things where I can look at an appraisal. There was a time I was a senior reviewer with Countrywide back in the day, and all I did was look at, appraisals for the western region of the United States. So I've seen more appraisals. So there's so many gotchas within that report that appraisers who aren't very good make mistakes, and they do make a lot of mistakes. So if they're not confident in their ability and they're making mistakes, all of a sudden we have your deal is hinged on that. That's a recipe for disaster. And send me that appraisal. I have no problem putting my eyes on that and finding mistakes on it, because there are mistakes for sure.
By the way, what's the best way to get a hold of you?
Yeah, texting is not a good idea, but if you could send me an email to tinaburke11@gmail.com and attach the appraisal, tell me a little bit about, just a summary about the deal, and I'll take a look at it. Some appraisers are very good, like me. Just kidding. But
Yes,
some appraisers are not. There's some that are very new, and they don't really know how to extract items of value from the transaction and the sales they're looking at. They just don't have the ability and the knowledge or the experience to do that. So they make huge mistakes, and they go outside of the neighborhood. And I'm going to put this out there because this is a super important point. Now that we have this COVID thing going on, you're going to see the appraisers who don't need the money, the ones who are more established and better at their jobs, sitting at home and doing like the exteriors. And you're going to see the really awful appraisers who don't have great experience and are just looking to make a couple $100 out there doing your appraisals. Make sure you meet them, make sure they're knowledgeable, make sure they're experienced, they know your neighborhood, the areas, all of that stuff. You interview them and make sure that they're good enough to be, valuing your transaction.
How would you know how to evaluate a good appraiser? I mean, isn't that the bank choice who they send out?
Yeah, but the seller agent is going to get the phone call almost always on setting that up. have a conversation with the appraiser as a seller, as representing your seller and advocating for him or her, and say, you know, do you know the neighborhood? Where are you coming from? And if you don't get a good feeling about the guy coming from Pomona to do your Cal Heights appraisal, then contact the buyer, the buyer's agent, and say, hey, this appraiser that's coming to do your loan doesn't know, doesn't know the area, and I don't have a good feeling about it. They'll reassign the appraisal to somebody else if you can tell them that this person you don't feel he's qualified. I'm really hard on appraisers when they come to appraise properties that I have listings on, for sure. Even the buyers, like, I go there and make sure I talk to them.
Yeah, and that's, whoever's listening right now, that's a very powerful kind of like behind the scenes tip. Thank you for sharing that, Tina.
Mm-hmm. Sure.
Definitely initiate and take, the lead on that and the leadership on that. At the same time, be cautious how you ask it, so you won't just, start to eliminate one after another in case it's going to be like back to back, maybe non-qualified appraisers.
Yeah, I mean, I would start off with, trying to be as, kind as you can to them, because the appraisers are, they're not at all represented. Like, we as realtors are completely represented by a big, like I said, lobbying groups and people who in Washington, D.C. that are looking out for us and have our back. They have no one. And so they really are their own best advocate. So, they know that it all falls on them. They know that they can get sued by a bank, and they're not being sued by a homeowner. They're being sued by Wells Fargo. And they're, E&O is being invoked. So they're cautious, and rightfully so. They got, if you think about in 2009, every single appraiser, including myself, who owned a business, lost that business to the Home Valuation Code of Conduct. So I had 1,500 lender clients in my for my company, and I did appraisals across from Northern to Southern California, every county. And I lost every single one of my clients on April 1st, 2009, because somebody needed to be blamed for the meltdown, and the appraisers took the fall for that. So you have to kind of understand the background as to why they are the way they are. And they can be annoying, for sure.
Yeah, and once again, that's why I'm having you here sharing, because you really, really have the deep understanding of the metrics and behind the scenes based on what happened in the past. And I appreciate you and people like you, professionals like you, that your insight is valuable, because whoever's out there listening, if you went through the last market crash, or if you haven't, there's a shelf life to the crisis as well, and it will come back in different ways, shape, and form. The new normal, or whatever we want to call it. But we have to be educated while talking to such professionals like Tina about how things might look like, and more importantly, how we should approach it, and how we should keep conducting business, etc.
Yeah, it's it's on one hand, the appraisers are a necessary evil. They're there to mitigate the bank's loss, and if you want to borrow someone's money, you have to play by their rules, and that's the bottom line. But we can make sure that the person who's coming to do that appraisal has the information and experience in your neighborhood to make sure it gets done correctly. And if it doesn't get done correctly, it's a very easy thing, because it's not always going to the appraiser and asking that appraiser to look at alternate comps or to adjust the value, because that's a difficult thing to have them do, to admit that they're wrong. But we bypass the appraiser and go to the chief appraiser for the appraisal management company, and we tell that person, you hired an appraiser who did a bad job. Now we need you to fix this. And they can sign off on it. They have credentials to do that.
Interesting. Yeah.
Yep.
Tina, anything else you want to add while you have on the call?
No, just, I'm here if you guys need me. Just, let me know. I hope everything goes smoothly for everybody and stay safe and healthy.
Thank you. And just to mention, Tina, she's just an amazing person besides being a talented professional. So by sharing her information, take advantage of, the knowledge. And of course, I refer you, Tina, out there for people that need to hire independent appraiser all the time.
Right.
But
Right. Thank you.
don't take advantage of your goodness and your kindness, because you're not, people call you. You just do it as a favor and as a passionate professional that want to help people as well.
Yeah, definitely. I'd hate to see anybody lose a deal and not for appraisal issues. I've had them where they don't go our way, where we fight it. And I was on a deal with Allison Van Wig this last year, the year before. We can't remember, but it didn't go our way. We couldn't get it changed no matter what. So, it was a bummer, and it happens. That happens. But, I can tell quickly if the appraisal has issues, and it takes me a short amount of time to write something up if that's what we need to do to save the deal.
Yeah, well, Tina, I know that you're on your way to celebrate your birthday with your sister.
Thanks.
Yeah, thank you for making yourself available, and stay safe, and thank you for your precious time. I love you and I appreciate you.
Love you guys too. Take care and have a great weekend, everybody.
Thank you. Tina Burke, certified appraiser and great realtor out of our KW Coastal office. Next week, stay tuned to our team meeting on Wednesday at 10 a.m. I'm going to have Dennis is an eviction attorney. We'll talk about that aspect of the business and what's coming or not coming. And on Friday, we're going to have the LA Chargers from the NFL. They're going to talk about the draft. I think that started to take place last night, NFL draft, and they will talk about the new LA Stadium. It was supposed to launch and open in September of this year. So we'll talk about that and just talk about the Chargers. There's great guests to have and more things to share. So thanks everybody for watching and for participating. Stay safe, stay focused and busy, and stay tuned to our calendar that will come out in the next couple of days. So thanks everybody. Be safe. Be well.